Mubarak here of In Penny Stock. Hope you're doing well. In this episode, I want to cover the 5 most important trading laws that penny stock traders should follow. All right, and the reason I'm calling it laws is because these are the 5 key areas where you cannot slack. All right, you cannot avoid this, and you have to follow these rules, or else you'll burn out. And the thing I hate seeing the most is successful, smart people that are trying to do better for their family, make more money, be a bit more comfortable with making their ends meet, mess up the opportunity that trading provides because of these 5 mistakes. So essentially, these are laws that have been put in place after teaching and working with over about 50,000 students in the last 5-6 years since we created In Penny Stock. Let's get right into it. All right, the number 1 law of penny stock trading is to limit your losses. All right, you've probably heard me say it a bunch of times, but I'm going to keep on saying it because that's the one major way that you can completely lose this, right? In other games, you play, and unfortunately, if you lose, whatever, you can still come back in and play, right, in sports. But if you're playing and you break your leg, now you can no longer even play. So not limiting your losses is that same equivalent to breaking a body part and being permanently handicapped. Because if you don't limit your losses and you just pray for a random price change and you don't follow your rules and you don't cut the losses, then you're out of money. And if you're out of money, you cannot even trade in the first place. So regardless of how much time you put in studying or how much, hours and hours of video or content you went through, if you don't have the money to play, there's no point. All right, so that's a very simple but important law number 1. Law number 2 kind of operates on this, but on the winning side, more of a positive law. It's don't get greedy. Okay, a lot of times people think that when a stock skyrockets, and let me tell you, once you get into the method of In Penny Stock or the trading strategy that we teach, once you get comfortable with it and start implementing it, you'll find stocks that skyrocket up and double within probably minutes, okay? Because the stock market reacts fast. There's a lot of automation today. There's a lot of people just invested in the markets. And it's not only, the United States or Americans technically trading. Now, because of the internet, globalization, I have almost 10-20%, meaning 10,000 students that are trading outside of the United States too. So you're not only competing with other Americans, you're competing with everyone around the world. And when that's happening, the amount of momentum and volume against a stock trade can change very drastically, right? So the ups will be super rapid and so will the downs. And the worst thing ever is if you have the opportunity to make thousands of dollars, but because you get greedy and hold on to your trade, you don't sell and you miss out, right? Because the tide can turn in seconds, exactly just like that, unexpected. The tide can turn. And if that happens, you don't want to be caught holding the bag, right? Pump and dumps, the up and down volatility of the stock market occurs on a daily basis. So every day, there's very fast exchanges going on, and you can end up losing out on not millions, but let's say thousands of dollars if you don't do this trade correctly, right? The third rule is another interesting one that a lot of new day traders get wrong, which is to be patient and avoid over trading. All right. So if you take a look, I recently came out with a podcast last week where I was talking about what are the 3 common principles that millionaire traders implement, right? And what that is they know and hone into one specific strategy and only trade that strategy. What does that mean? That means sometimes that these successful traders won't even trade every day. All right? You have to wait for the precise and unique setup to come about. And for that to happen, sometimes it may not occur on a daily basis. It may happen, 2 or 3 times a week. So you need to learn to be patient and make sure that you don't overtrade, right? The problem a lot of people end up running into is that they're thinking that, hey, listen, like this is all I'm doing. This is my way to make money. And they just come up with fake, optimism that the trade is going to turn in their favor, and that even though not all the catalysts are lined up and it's not an ideal trade situation, they're still hoping that there'll be a little luck or a little 10% chance of surviving. And believe me, I've been there. We've all been there, right? And I'm trying to tell you this up front so you can avoid making the mistake and avoid losing the money, because 9 times out of 10 you will lose that trade. And I want you to remember this before you get involved in that, to save you and thousands of you guys watching a lot of money. Okay? Now, rule number 1 was limit losses. Rule number 2 was, don't get greedy, right? The small wins add up, right? You want to make sure that you lock in your profits. Number 3 was to avoid overtrading. Now, number 4 is to adapt to market trends. Okay? And so within that law means that you need to be versed in what the market trends even are. All right? In 2018, stocks were really hot. Same thing with the first half of 2019. In the second half of 2019, everything sank. But again, that's only within the cannabis space. That specific niche or industry tanked. The rest of the stock market did well, right? And so if you're not aware of this, then you can kind of lag behind, and you won't be able to be as successful of a trader if you aren't able to follow these trends. Now, generally speaking, in order to get that information, we go into rule number 5, which is to be resourceful. All right, this is probably the law that encapsulates all of the other ones, but it requires and basically is promoting or telling you guys that you want to make sure you have the right tools available at your disposal in order to be successful. All right, you need a stock screener, right? You need a certain software that you can utilize in order to get your information, in order to get upcoming and updated news about stocks, right? So for like a stock screener, you can use something like FinViz, or you can get a paid thing, which is a little bit better, through something like Equity Feed or Stocks to Trade. All right, you want to have a platform to be able to research stocks. So if you use something like finviz.com, or again, that's a stock screening criteria website. You obviously need a brokerage platform. You want to have access to level 2, right? So these are all certain kind of features and tools that you need to have set up before you even get into trading, all right? Or while you're learning and studying, you can kind of make sure that you have these tools lined up. All right, there's no point in going into the financial game of trading without having the right tools in place. But for some reason, people think that it doesn't apply to penny stocks, or it doesn't pertain when it comes to their money, which is probably, one of the most important features or aspects of what they have. But I don't want you guys to fall into that boat, so I'm just telling you, make sure that those things are thought out. And we have free resources at inpennystock.com for you to be able to learn more, for you to be able to get these resources, get these stock screeners, get these PDFs and swipe files that'll help you stay organized with a stock trading journal and a profit and loss tracker. All of those tools are available. So if you have any questions, as always, feel free to reach out to me at admin, that's ADMIN, at inpennystock.com, and hope to hear from you soon. Take care.